Hello and welcome to Startup Street. I'm Shruti Mishra and with me as always is Arundhati Ramanan. These are the top headlines from the startup space.
Auto segment EBITDA margin was very close to positive even last quarter. So our auto segment EBITDA margins, one can assume in that timeline will be in the positive territory.
As Ola's losses narrow in the second quarter, CEO Bhavish Aggarwal says the company is on the path to profitability, adds he expects the auto business to turn EBITDA positive by next fiscal, insists that service issues and backlogs are a thing of the past and that Ola now competes 80% of service requests on the same day.
Mortgage tech company Easy raises $35 million in a Series B round. Round was led by Clay Pond Capital and Sumitomo Mitsui Banking Corporation's Asia Rising Fund. Existing investors also participate. Startup to use the funds to expand its loan book to $300 million in the next 24 months.
Math learning platform Bhanzu gets $16.5 million in a Series B round led by Epic Capital and supported by Z3 partners. Existing investors Lightspeed Ventures and 8 Roads also participated. The firm eyes deep expansion into the US.
Equal raises $10 million in a Series A funding led by Process Ventures with participation from Bloom, DSC Global, Tomales Bay Capital. The data sharing platform also saw a host of investors like Binny Bansal, Karan Adani, Kunal Shah, Kunal Bell, Nikhil Kamath, Parth Jindal participate. Funding values the firm at $80 million.
In a bid to reduce food wastage, Zomato launches a new feature on its platform called Food Rescue, will allow customers to buy cancelled orders at a discounted rate. CEO Dipinder Goyal says that nearly 4 lakh orders are cancelled every month despite a no-refund policy. As per Goyal, the cancelled order will have the original packaging and Zomato will not keep any profits from the resale.
Walmart-owned Flipkart achieves milestone with 10,000 electric vehicles in its delivery fleet. The firm is aiming for 100% electric last-mile logistics by 2030 as part of Climate Group's EV100 initiative. The e-com platform says the shift has helped improve efficiency by 20% and also reduced costs.
Bitcoin surges to a record high, breaking $81,000, fueled by optimism that cryptocurrencies will thrive under a favorable regulatory environment following the election of Donald Trump as US president, along with pro-crypto candidates in Congress. The world's largest and most widely recognized cryptocurrency has now more than doubled from its yearly low of $38,505. Well, those are the headlines we've been tracking for you this evening. Moving on to the big newsmaker of the day, Ola CEO Bhavish Aggarwal has said that the company is on the path to profitability as its losses narrow in. And speaking exclusively to CNBC-TV18, Aggarwal said that he expects the auto business to turn EBITDA positive by next fiscal. Aggarwal also insisted that service issues and backlogs are a thing of the past.
The auto segment EBITDA margin was very close to positive even last quarter. So our auto segment EBITDA margins, one can assume in that timeline will be in the positive territory. See, for the foreseeable future, I expect about 1/3 of our volumes to come from premium and about 2/3 from the mass. That would mean revenue of about 50-50. Any service backlogs are all history now. We are now doing more than 80% service requests within T+1 days. That means if you bring your scooter today, we will service it today or tomorrow. 80% of such issues are resolved in T+1 days. But our focus is to really build the future of the automotive segment, automotive industry with Ola Electric. And we are allocating capital wisely. We are on the path to profitability. So I do expect shareholders and prospective shareholders to join this journey and really build the future with us.
Let's shift our focus to the commodity space. The world's largest cryptocurrency, Bitcoin, has hit a record high just days after Donald Trump's historic victory in the US presidential elections. It breached the $81,000 mark for the first time and has more than doubled its price since January this year. We have Manisha Gupta joining us with more details. Manisha?
The world's largest cryptocurrency, Bitcoin, has hit record highs just days after Donald Trump's historic victory in the US presidential elections. It breached $81,000 mark for the first time and has more than doubled its price since January this year. Well, the other cryptocurrencies, including the Dogecoin, backed by Trump's star Elon Musk, also has made gains. A day after the election's outcome, Bitcoin ETFs have seen record-breaking $1.3 billion in net inflows. The futures premiums are also soaring, with investors betting over $2.8 billion on Bitcoin, topping $90,000. But here is something to note. Bitcoin has always rallied after the results of previous presidential elections. In the 90 days after 2012, when Obama won, Bitcoin was up 87%. In 2016, after Trump won, it was up 44%. And in 2020, after Biden won, we saw 145% of a rally. Also to note that all of election years are also Bitcoin halving years, which occurs every 4 years and reduces the block reward by 50% and lowers the supply of Bitcoin. Trump's re-election has reignited enthusiasm in the crypto market. But what has he promised? Well, he has declared that the US will become the Bitcoin superpower of the world. He's also promised to end the anti-crypto crusade and fire the current US Secretary Chair Gary Gensler on day one. Gensler is not a popular figure in the crypto community, but it was under Gensler that crypto began trading on Wall Street. President Trump is also now running a crypto business. In the run-up to the elections, he launched World Liberty Financial. The details are sketchy on what this company intends to do. It has raised nearly $15 million so far by selling tokens. But these tokens have no ownership stake and it cannot be traded as things stand.
Thank you, Manisha, for those details. Appreciate you joining us. Moving on, also on what's brewing, mortgage tech startup Easy Home Finance has raised $35 million in its Series B funding round. The round was led by Claypond Capital and Sumitomo Mitsui Banking Corporations, Asia's Rising Fund. Existing investors, including Exponential Capital, Finsight Ventures, Harbour Front Capital and Pegasus India Evolving Opportunities Fund, also participated in this round. To tell us how Easy is enabling mobile-based mortgages for India's underserved market, joining me now is its Managing Director, Rohit Chokhani. Rohit, welcome to Startup Street. Easy is a digital-first mortgage company that provides home loans to India's middle-income consumers. Tell us, how are you enabling mobile-based mortgages? Also, how easy and efficient are your offerings as compared to traditional mortgage processes?
Hi, firstly, thank you for having me tonight. And, how Easy is changing the entire landscape is that, what happened to payments back in 2015-16, when Paytm really took off, and what happened to the personal lending revolution. That's what we are getting to the mortgage revolution. So what we've done is that we've taken the entire platform on mobile. So a customer can simply download the mobile app. There's no paper forms, there's no branch visits, there's no physical submissions at all. And any applicant from any tier 2, tier 3, tier 1 periphery city can apply for the entire home loan absolutely online and on the mobile app in multilingual languages, and can absolutely check whether they're eligible or not eligible to get one. And we are enabling mortgages. So we are enabling around about 10% mortgages on the same day. When the application happens, we are enabling 10% of our customers to move into their house on the same day. So that's how the entire technology process has completely changed for us. In the last 5 years, we've been working towards, digitalizing the entire journey.
All right. So, you've told us how you've enabled real-time credit appraisals, digital property validations. You've basically simplified access to home credit. But tell us, who have you partnered with? Which institutions have you partnered with in order to help individuals realize their dream of home ownership?
Right. So we've onboarded more than 20 financial institutions in India. Almost all the banks are our partners in India. And on the co-lending side, we've partnered with DCB Bank Limited, and we've also partnered with Bajaj Housing Finance Limited. So we've also partnered with different people on the co-lending side, and we've partnered with a lot of people on the onward lending side, especially to cater to the entire priority lending sector. So anybody who's looking for priority lending sector is basically a partner.
All right. You're on a mission, Rohit, to digitize the mortgage industry. Tell us, how many loans have you disbursed so far? And if you could take us through your current business growth numbers, what is the top line looking like?
Absolutely. So we've given more than 10,000, we funded more than 10,000 customers or home loans, in fact, homes so far. And our top line for this financial year looks at around about 150 to 155 crores. and with a healthy profit after tax margin, and we'll be gunning for a 3% plus ROA.
Those are some good numbers, Rohit, there. And let's get to the fundraise now. With the fresh capital raise, Easy aims to expand its assets under management to $300 million within the next 24 months and plans to grow its network to over 150 locations across India. How do you plan to achieve this, and where do you see the next leg of growth coming from, Rohit?
Yep. So, interestingly, I will just like to give you some fact that, 86% of India's mortgages actually only come from 12 states in India. And Easy is already present in those 12 states. And what we are going to do is now, because we are present in the main peripheries and urban peripheries, we're going to go deeper into all the districts within those states to cater to the largest mortgage demand out there, right? And that's how we're going to expand over the next couple of years. And on reaching around about 2,500 crores or $300 million of book, what our aim is going to be is that we're going to partner with a lot of PMAY projects, which is the Pradhan Mantri Awas Yojana projects. As you're aware that these projects are back, the government approved the entire subsidy scheme again, right?
Yes.
So all these projects are being made, and just as a fact, around about 8.3 million houses are currently being built, which are less than 30 lakh rupees in ticket size.
Yeah.
So that's how the growth is going to come from.
Rohit, one final question. While mortgage tech has made considerable strides in markets like the US, where many tech-driven players have achieved unicorn status as well, you claim you have the first mover advantage. So who's your competition? Tell us, how big is the mortgage tech potential in India, and what are the new offerings in the pipeline? What kind of an impact do you see them making going forward?
Yeah. So, in terms of competition, I first perceive that every housing finance company out there are around about 90 of them. Everyone is a competition, but everybody is not a competition also, because all the housing finance companies are still brick and mortar. So, of course, like you correctly mentioned, we are the first mover advantage. In the US, of course, the industry is much older. And that's why you see many more technology-oriented unicorns in India. But, within the next 3 to 5 years, you're going to see that there's going to be a breakout within the entire secured lending space, right? And within the next 3 to 5 years, you're going to see at least 10 to 12 unicorns coming only out of the mortgage lending space. So that's what I feel. That's how the industry is going to go forward.
All right, Rohit, tremendous potential there. We've run out of time. Many thanks for joining us on Startup Street today, and wish you the very best.
Thank you. Thank you very much.
On what's brewing today, space tech startup GalaxEye has raised its $10 million Series A round led by Mount Tech growth fund Kavach. The company raised the first tranche of the Series A funding amounting to $6.5 million in August this year. Mela Ventures, Speciale Invest, IdeaForge, Rainmatter, Navam Capital, Fard Capital and Anicut Capital also participated in the current round. Founded in 2020, the firm specializes in providing precise data sets from space and aerial platforms via their advanced multi-sensor payload. Joining me now to elaborate on their fund allocation plan is Suyash Singh, the co-founder and CEO of GalaxEye. Suyash, it's great to have you back on the show. The last time we spoke, you just inked a deal with InSpace. But, today you've raised this $10 million. If you could sort of take us through how you plan to deploy these funds at this point.
First of all, thanks for having me again on the show. Of course, we're very happy with the fundraise that has happened very recently. The idea is to really put together the first satellite and, have a very successful launch. This will be the first, the largest satellite built privately in India. And it will host some unique sensors, which we are very excited about. So largely, it's going to be deployment in space.
So largely in deployment in space. So this latest tranche of investments essentially is going to accelerate the development of your upcoming satellite mission, which essentially aims to deliver high resolution all-weather multi-sensor data next year in 2025, right? If you could elaborate on what this entails for, in layman terms for people to understand better, and what could the applications of this be?
Right. No, I think, the most simplest way to understand that is, space applications are divided into 3 parts. Communications, navigations, and imaging, right? While communication navigation is something which is very commoditized and you use it on a daily basis, imaging is something that is still not as yet there. So GalaxEye is trying to solve that problem very uniquely by combining 2 different sensors and bringing them together so that you have unperturbed all-weather, all-time imaging in place. which will lead to, solving for commercial monitoring, defense and strategic monitoring, national security monitoring, etc. Right?
Right.
In the recent past, we've seen the Ukraine-Russia war, multiple other geopolitical events, which leads to really, having more knowledge about a particular incident. So it
Right.
starts defense, also goes up to commercial, such as agriculture, which is we are one of the biggest agriculture economies. We need digital public infrastructure, DPIs for that matter, and satellite imaging could be a great source.
Right, absolutely. So, from what I can understand, the technology is going to play a crucial role in a variety of sectors and segments, ranging from defense, surveillance to agriculture, maritime, and insurance, right? So if you could sort of give us a sense of the kind of clients that you're going to work with, who this will be useful for, and the kind of efficiency you're hoping to bring in with this real-time data.
So again, like I said, it's going to be ranging from defense and agriculture. So it will be civilian ministries, it will be defense ministries on the government side of the story. But at the same time, there will be corporates, right, who are into supply chain, for example, right? They need to source a particular things. They need to source grains. They need to source fish, shrimps, etc. So how do they, get a better sense of or, supply intelligence from the ground? So it'll be corporates, largely B2B. It will be governments on the civilian side as well as defense side of the story. And they have, been using this. They have been trying to utilize satellite imageries for a while now. It's been around 10 to 12 years already.
Right.
What we put on the table is an unperturbed imaging, all weather, all time imaging, which makes them to use this more efficiently, right? So instead
Right.
of waiting for during the monsoons, instead of flying for drones, you can still use satellite imagery to your advantage.
Correct, right. So if you could sort of then tell us, what's your revenue model going to be like? Are you currently making any money, and what are the targets for this year?
So we're definitely, generating some revenue, although, our meaningful revenues are going to happen once the satellite is in the orbit. And then going back to your first question as well, right? This is going to be a data as a service model. So for example, you need to monitor your farmland of 10 square kilometers, right? So I will give you 10 square kilometers for an X amount of price.
Right, understood. And, if you could quickly answer this question, the Union Cabinet recently approved a 1,000 crore rupee venture capital fund to support firms in the space tech domain, right? So where do you think this money needs to go? Any specific focus areas that would, be beneficial from this venture fund?
I think it's an early stage to growth stage fund, that's being evangelized. It
Right.
should, in my opinion, it should go from upstream to downstream of the technologies, should not be restricted towards one side of the story. But, apart from that 1,000 crore venture capital fund, there's many more other opportunities, right? For example, Cabinet cleared the launch of 52 satellites. There are multiple PPP programs that are done by InSpace and Encel. So I think there's a gamut of opportunities where private investors can also come in and join space tech as a journey.
Quite a bit of impetus being put there for India's space tech startups. But Suyash, thank you so much for taking time out and being here with us on Startup Street.
Always, Shad. Thank you so much.
All right, with that, it's time for us to head into a quick commercial break. But coming up, from a ride-hailing platform to a super app, what's driving Dubai-based Careem's growth in the Middle East? A special conversation coming up on the other side. Stay tuned.
Welcome back. You're still with us on Startup Street. From being the Uber of the Middle East and becoming the region's first unicorn to now being a super app, Dubai's Careem offers over 15 services, including payments, food, grocery delivery, and more across 10 countries and 80 cities. To decode the platform's growth trajectory, adoption of AI, quick commerce race, and learnings from Indian counterparts Zomato, Swiggy, and others, my colleague Aishwarya Anand caught up with Mohammad Sharafuddin, the VP for Data, AI, and Product on the sidelines of GitX Global. Here's a slice of that conversation.
From a ride-hailing startup to now becoming, a platform which has all the services in it. I want to understand how the journey has been. It's been over a decade for Careem. And, what was the point where you realized that AI is going to be very fundamental in terms of your growth going forward?
Balancing the marketplace between supply and demand had to use machine learning back in the early days and continue to do so. And we also do a lot of fraud detection using machine learning back in the days. This helped grow Careem and stabilize Careem in the ride-hailing sector, ride-hailing business. On the food delivery side, personalization became key. And similarly for the grocery discovery experience. And right now we're launching Gen AI to even help in the restaurant discovery experience to go out and dine out.
Adding on to that, I also wanted to understand that how do you integrate AI to your decision making? And does that help you stay ahead, in terms of the competitors in the market of what they are doing?
ETA prediction is one. When the food will be ready, when the captain will arrive, how long will the captain stay with the food, how long will the meal stay? We don't want the meal to be cold. The captain will pick up the food, will drive on the road. Is the road congested? Yes, what is the traffic awareness, ETA? The captain will park, will go to the apartment building, the vertical journey. All of that has to be computed. And there's thousands and hundreds of thousands of computation that you need to do every single day. So for these, you have to rely on AI to make that decision. That is kind of fast decision, real-time decision. Integrity is also another example. Marketplace optimization, another example.
Is it translating into your top and bottom line as well? How does that work?
Yeah, definitely. We have areas of AI that focus on the top line. So conversion, personalization helps conversion. And what leads where we need to spend our money for lead generation and marketing spend. So a lot of those are top line related. There's a lot of things on bottom line related and efficiency, whether on marketplace optimization, whether on care automation, preventing losses.
We're seeing a huge trend with quick commerce, and with a platform like yours, it just fits right into that. Have you hopped onto the bandwagon, and are there plans to incorporate this 10-minute delivery into a lot more services?
10 minutes delivery? So it depends on the density of the area. So in areas like Marina, and based on where the density and makes sense, you could do 10 minutes. You could do 12 minutes. But if you go that, hey, 10 minutes in all Dubai, you will fail as a business. Are
you, piloting it with certain services though? Where do you think it could do? Probably like with groceries, which could it do it well? Are there any plans on that front?
So our grocery delivery business is called Quick.
Yeah.
It's called Quick for a reason.
It's called Quick for a reason.
Yes.
Okay,
so
all right.
Because what we do is a fast grocery delivery.
Yeah.
And a lot of the time, our deliveries are with less than 15 minutes.
You're building a super app, and consumer-facing companies already face a lot of problems in, getting profitable, cutting down losses. For fair reasons. But having a super app model, how do you tackle that challenge?
Yeah, it's definitely hard. It's definitely a challenge, which why it makes it defensible if you're able to do it well.
Yeah.
And this is where we spend a lot of our energy, and to create an experience that comes together, and they have to make also business sense. So you have to structure your platform or your engineering in a more of a platform way, that the marginal cost of developing a new service is lower. And from a customer point of view, everything has to make sense.
Correct.
And we bring a subscription program, Careem Plus, the strongest, fastest growing, and the dominant subscription program in Dubai, to tie all the services together where the customer are getting value out of it and getting also access to exclusive deals.
You know, of course, you said that you're very concentrated on the MENAP region. But, you know, I mean, because India has a lot of similar models working there. I want to understand that when you see the players there, is there a playbook that you incorporate? Is there a playbook that do you think we should incorporate from what Careem's model is?
Whether there are learning from other experiences of an everything app or a super app across the world, definitely we learn, and it's a vice versa, it's a mutual learning in the industry. But the right or wrong is, or what makes sense, is what the customers are saying. And so what might work in India, what might work in Singapore or Southeast Asia or Latin America is different than Dubai or KSA or Amman or Egypt. And each city is different. So we have to really tailor the everything app value proposition to each city.
Well, with that, it's a wrap from Arundhati and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side.